fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. The stage is set, digging deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower that your financial life may or may not have been missing. And whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now, today we have an exhilarating lineup of segments to give you all as much information as quickly as possible. 3 segments for you guys today. As per usual, we'll go over our live trading and market analysis. So we'll take a look at the market between now and market open, maybe get into some live tradings if we see some opportunities, which with what today is probably won't early on in the day, but we will see. Then we're having our June FOMC prep. So unless you've been living under a rock, if you're a day trader, or if maybe you're an investor, you don't pay as much attention, today is FOMC day. So we'll know about, and we'll get more into that in a little bit, and why it's important and what to look out for pre and post meeting. And then finally, one of my favorite segments, dumpster diving. I have a stock for you guys that I have dug up from the trash. This stock is 84% off of all-time highs. Very beat up right now. It has strong brand identity. It has AI integration. Sort of, but yes. And it's probably going to break all-time highs one day. Now, that's a very, very, very strong statement for me to say, but I'm very confident on that for a multitude of reasons. And that is going to be the stock that's on today's dumpster diving segment, which will probably be around 10 o'clock. So make sure you stay tuned for that. Very, very excited about this name. It's a name I've been following for quite some time. I've been waiting for the right time to say something. And with how we're sitting in the market, we might be seeing that opportunity sooner than later. Obviously, depending on how you position yourself. But this is a name I really, really, really like. I gave a hint. If you follow me over on X, there's a little hint there about what it could be. But if you have any guesses, you want to drop them in the chat, feel free. And if you guess correctly, nothing's going to happen, but you get bragging rights. So there's that. Anyway, let's get back into the market. Let's say into the market because we haven't gotten there yet. Right now, the market is almost open. We're a little bit green in the pre-market here, but not really much to say. This price action's very meh. Before market open on FOMC day. Like I like to do with you guys, before we get too in the weeds of looking at charts, I do want to look at our catalyst watch for the day. And as a quick reminder, before you get into trading today, don't forget, outside of today being FOMC day, tomorrow the market is closed. The market is closed. The market is closed in observance for Juneteenth. So especially if you're a day trader or you're trading weekly contracts, it's very important. I spoke about this on Monday, but just please take that into account with your trading today and into the weekend, into next week. Also, Friday's OPEX, so be mindful of that as well. A lot of things to keep on the front of your mind if you do decide to open any new positions or any short-term trades, really, I should say, between today and Friday. As it pertains to any catalysts, let's refresh my catalyst watch here. We did have jobless claims at 8:30 this morning, which, as you see, not much of a reaction, really. Outside of that, today, we're pretty calm, honestly. You do have the 4-week bill, which probably isn't going to do much. We have the White House crypto czar speaking at 11:40, so I guess if you care about crypto, maybe keep an eye on that. And Trump is at a swearing-in ceremony at noon. However, the big thing to watch today, again, is FOMC. That's going to start, I should say, at like 2, the press conference at 2:30. So at 2 o'clock, you'll actually get the interest rate decision. Personally, I think myself and a lot of the people in the market are assuming that there won't be a rate rise nor cut. but the things will just remain unchanged. Now, with that being said, I'm seeing things that would be indicative of some people hedging their bets that there could be a rate cut. And we spoke about this on Monday as well. We'll get more into this in the FOMC prep. But there is a small contingent of people looking like there is a cut. And we also spoke about how Trump has been pressuring Powell to cut by a full percent, which he's not going to do. I'd be shocked if that happens. But Trump pressuring Powell to actually start cutting rates. So there could be some validity to those thoughts at this point in time, but we will see. So again, that's the big thing today, 2 o'clock, and again, 2:30 for the actual press conference. So I don't expect too much volatility. You'll see probably a little bit at 2, before 2, a few minutes before, but the real volatility will come through during Powell's press conference, because it's going to be very indicative of what he says. Obviously, those forward-looking statements from the Fed are going to give us a better idea of which way the Fed's leaning in terms of policy, if we're leaning more hawkish or dovish, and that's what the market wants to look for, because obviously the market is a forward-looking tool. All right, that's our Catalyst Watch for today. We already have Thursday. We talked about there's no market open tomorrow. Obviously, things are still happening, but we don't really worry about that. And as for Friday, let's just take a quick look here. Yeah, outside of OPEX, nothing for Friday. OPEX is a pretty big one, but no, as I like to call them, landmines on Friday. So let's get into the market right before we hit open here. We got 6 minutes until the open. Right now, like I said, SPY up marginally in the pre-market here. Q's up marginally as well. IWM flat to red right now, so you're seeing a little bit of a divergence here, albeit price actions moving pretty similarly. Like you're seeing candles are looking the same, all things considered. We did see a nice push on UVXY and the VIX yesterday. I actually opened a long on VIX, or I should say on UVXY yesterday. It was looking like if we broke that 21.5 level on UVXY and held the break, that we would get a markup on volatility. That's what I bet on with a $22 call, and now I'm happily running runners, or holding runners on UVXY, over 100% gain there on betting on volatility going up, even though the market was just kind of like shaky yesterday. So keep an eye on volatility today. Obviously, it's going to be on the forefront of a lot of people's mind heading into FOMC, but this is something you want to keep an eye on, either UVXY, VIX, or any other VXX, whatever you use to track volatility. Just keep something up just so you're aware of which way the market's leaning in terms of, like I like to say, price discrepancy. Looking at our Mag 6 real quick before we get into the open. NVIDIA, quick little drop here in the pre-market right before we open. Apple pretty flat. Microsoft flat. Yeah, nothing really to report here on the Mag 6, as I like to call them. Nothing too extraordinary. Let's sweep over to our sectors real quick and take a peek there. See if we notice any quick divergences out the gate. Utilities up a little bit in pre-market. Energy up, which isn't shocking. Staples up a little bit. Tech is up as well. So let's see who wins the fight here between tech and energy. We'll see if we get one of these names to really push over the other as we push into the open here. Real estate up a little bit here. Materials up. Industrials flat. Healthcare pretty flat. Financials flat. Consumer discretionary flat. Comm service flat. So overall, pretty flat open, supported by obviously just looking at the SPY. We're not really going anywhere here, which isn't really shocking before a big day like FOMC. So seeing that this early isn't really surprising. But obviously in the first few minutes here, we'll get a better idea, see how volume is, and we can kind of play off if there is an opportunity to open a position potentially going into FOMC, or if not. The other thing you want to be very mindful of today, watch your 0 DTE IV, and we'll talk about this right at open, and we'll get into that. So I guess this June FOMC prep is going to be kind of sprinkled throughout, but I'll try to have like a concise little segment a little bit after open that we can talk on. That way you guys know what to look for, but watch your 0 DTE at IV as well. Guys, with 3 minutes of the market opens, I know a lot of you are busy. I know a lot of you are probably setting up trade plans, getting your station set up, whatever, or you're just listening to me at work, in your car, wherever you may be. If you could do me one quick favor, I ask you guys twice a stream, but I'm going to ask you once now, once later. Do me a favor, quickly like the stream, subscribe, follow me, whatever you may do. It's annoying. I don't love asking for it, but if I don't ask for it, tends to not happen, and I am a very small fish, and the algorithm likes when you click a button. So if you could please do me a quick favor, I don't ask for $1 for you to do this program or anything. All I ask for, if you find any value in this program, you find any interest, if I'm entertaining, if you learn something about a stock or whatever, please support me just by dropping a like, subscribing, or following me wherever you are, retweeting it out, some sort of level of interaction. That helps me very, very, very much in the algorithm, and I appreciate all of your... Right now I've got 53, so really a total of 106 eyeballs and ears watching and listening to me. I know you have many other options, many other things you could be doing, and I appreciate you spending your morning here with me. Okay, 1 minute and 50 seconds until the market opens here. I'll try to keep this as exciting and interesting as I can, but I feel like I'm going to be challenged, so we will see when the market opens now. This stock that I'm going to talk to you guys on the dumpster dive, I don't see any guesses in chat yet, so if you do have a guess, drop it in the chat. I've lined up, I tried to keep it very even. I tried to keep bull catalyst and bear catalyst. I've got 1, 2, 3, 4, 5, 6, looking at my notes, 7 bull catalysts with 1, 2, 3, potentially 4 bear catalysts. And obviously, if I'm bullish on this, the bull catalysts outweigh the bear catalysts greatly. And I think the bear catalysts are not that bad, all things considered. So you're definitely going to want to stick around for that. This is also, full transparency, not a name I've opened a position in yet, but I plan on doing so very soon. So I like to kind of give that disclaimer. I know a lot of people are dishonest about when they're long a stock, short a stock, whatever. And if I'm going to share something... If I'm already long it, I want to make sure you already know I'm long it. And if I'm not long it or not short it, whatever, I want to let that be known. That way you understand there isn't a bias at this point in time, because I have no money on the table yet. But I at least am expressing to you guys that I tend to put money on the table very soon. That way you know where my head's at. 30 seconds here until the market opens. We are opening again in this gap area, sub that 601.92, the obvious 600 on SPY. And north of that 592.65 LOI on the market. Keep an eye here on that green daily SAR, especially today. That number is 590.57, so that could mark a short-term downturn in the market. You also have the 21 EMA a few points above that at 593.13. So those are daily levels to watch today as we go through the day. All right, market's open. Let's see what we get here. Decent little red candle here at the open. Fill yesterday's close. What was that? Let's see. Close yesterday was 597.53. So not yet. Let's go back to... Actually, I don't even need extended hours on. There's not much that happened. Q's wicking down, trying to move back up here. Russell just tapped came close to tapping the 207.76 LOI. So hopefully we see some bullishness come through here on the small caps. Pretty muted so far. We might be talking about the June FOMC prep sooner than later. If it's like most FOMCs, today's going to be a very bone dry, boring day. Sometimes we do get a move pre-FOMC where we actually get a decent move up or to the downside. A lot of the times we do much of nothing and the price action is atrocious. Which is part of the reason why I wanted to do a stream today, because a lot of people take too much risk on days like today and they will blow their portfolio. And part of why I like to do this program is, again, not to offer you guys the bull or the bear side of the argument, which I do, but really to offer the risk on versus the risk off side of the argument, which is not something that's focused on at all. Too many times we're focused on if stock will go up or if stock will go down, and we're not focused on, should I have an exposure to this or should I not? And I think that is a way more important conversation, which is what I want to get into here momentarily, I guess, because we're already... Honestly, for 2 minutes into the open, pretty abysmal volume. That last 1 minute candle on the SPY, 291,000. I like to look for at least 100K, so this is well over that, obviously. But typically, the open, you see easily 500K pretty cleanly. So, already starting off on low volume. That's not a good sign from a risk perspective. Let's look at our IV at the money. So right now we're trading at 597.76. So in that case, when we're closer to the next strike, I like to round up to the strike. So we're looking at 598. And yeah, your IV's elevated. Obviously, we have FOMC, so keep an eye on this. Your IV is around 30, your 0 DT IV. Obviously, the market's anticipating that press conference, so there will be a little bit of IV. What you want to keep an eye on is if this IV climbs throughout the day. There have been times where we've had FOMC and the IV goes from 30 to 80, and there's been times where that IV goes from 30 to like 25. And in both scenarios, price action's stagnant. Now, that doesn't necessarily mean too much of anything, but what it could mean is, depending on where the chart is as well, if you are someone who wants to take a trade, you could take a trade basically being long IV in this scenario, assuming the chart, or assuming the price, in this case of SPY, doesn't really go anywhere. If you're planning on IV to expand, then buying options or having some sort of option structure where you are leveraged that IV is going to increase, you can actually make a little bit of money. For me, that's not a good risk to reward setup, at least in my opinion. For a lot of people, they probably would agree, but I'm just saying that is something that you can do and have exposure to if you so choose. Volume is really pitiful. We're going nowhere on low volume in the first 4 minutes here. Q's way more bearish than the SPY. IWM really trying to be the cornerstone at this point. So you're seeing a divergence. Again, we talk about this on this program quite a bit between the Q's and IWM for now. Q's very bearish, not a single green candle since the open. Meanwhile, IWM open bearish, tapped that support, came back up, and waiting to see what happens here. IWM really does not want to lose this level. On the daily, this 207.76. Beneath that, you do have your POC, which could catch you, but you have a green star as well, so that could cause a move to the downside. We also did fill this gap here, which I talked about last week. The gap left from 605 to, I believe that's 66, right? 66. We filled that gap the other day. So that downside gap is filled, which is good if you're waiting to be a bull. But you have a lot of support in this general area for IWM. You have this LOI here, 21 EMA, the middle range of the Bollinger Bands. You're above POC. But if this level is lost, you could get a pretty stark 3 to 5 point markdown. Maybe not right away, but it definitely could happen. I could see that happening pretty quickly. If you were to day trade today and you were to be a bull, IWM is probably going to offer you the best risk to reward as it pertains to comparing it to our other indexes here. Let's take a peek at the VIX. Interestingly enough, the VIX is, I feel like this isn't updating again. We'll come back to that. We'll look at UVXY. UVXY climbing out of the open here. I guess VIX gap down. I feel stupid looking at this. Why is my time all weird? All right, well, we'll come back to UVXY. We'll look at we'll come back to VIX. We'll look at UVXY for now. UVXY moving up right now, just shy of that 23 area, so volatility slowly on the rise. I like to look at UVXY and VIX because UVXY gives you a little bit longer exposure in theory of just looking at spot VIX. UVXY, I believe, uses 60 days. Now it's 30 days. And it gives you 1.5x. So what I like to look for here, especially on options flow, if people are taking bets on volatility, you can kind of see that a little bit clearer, at least in my opinion, through UVXY. There's a ton of other volatility instruments out there. You use whatever you want. This is just what I like. Look at our Mag 6 here. NVIDIA down on the open. As I've told you guys before, this is still going to be bullish as long as it's north of this 141.36. Obviously, intraday it can move down, up, wherever, but longer term, it's bullish. Interestingly enough, the red-haired stepchild, the one I hate, Apple, we have officially broken under the 195.83. So, we are in the realm of potentially shorting Apple. Not yet, but it is in a dangerous spot. Like I said, with pretty high degree of confidence, if this level breaks and confirms, and again, these are daily levels, so it may need a day or two or three, this more than likely will draw down to the high 170s, low 180s pretty quickly, in my opinion. So this is one of those scenarios where I'd be okay being late to the party and show up to the right house, as I like to say, where waiting for a confirmation, more than likely below this candle, or even this wick here if you want to be super careful, at 193, give you a little bit more confirmation, and there'd be plenty of meat left on that trade. if you like that short. Microsoft starting to round out up here, about 5 days up here on Microsoft, chilling around that all-time high area. We're in a very treacherous spot for Microsoft. You guys know how I feel about that. Again, another name I'm looking to short, but not step in front of the train just yet. Your weekly candles, you start to get these wicks forming the last 3 weeks. You're going slower and slower, less of a gain week over week here on Microsoft. So today could be that catalyst, and you're outside of the Bollinger Band on the monthly chart as well. So very careful there on Microsoft. Google still looks pretty solid. Again, I'm long Google from that 162.64 area. Amazon's fine, and Tesla's still a bear. Nothing has really changed. Let's pop back to the 1 minute here. SPY reverting back up, or trying to revert back to the upside here. Qs as well. Yeah, like I said, IWM, if you're going to be a bull today, you want to be in IWM versus in the Qs or in the SPY. I think you're going to get more of a, you have more of an opportunity to make money on IWM today versus the other two indexes. If you're someone who trades 0 days or you trade the indexes, I think the opportunity lies in IWM today. All right, guys, I think we'll roll into the FOMC prep a little early here because I can still talk about markets at the same time while we talk about our FOMC meeting today. So today's the FOMC meeting. For those of you who don't know, that essentially is where the Fed comes out and says how they're going to adjust, I should say how, if and how they would adjust interest rates. So if they're going to change them, and then obviously implement it right away. So today we find that out at 2 o'clock. Now, as I said if in the beginning of the stream, and I know a lot of people have joined since, so I'll reiterate, when the Fed has this interest rate decision, it's very important for a multitude of reasons. Many companies need to borrow money to grow in general, right? And the cost of borrowing money right now is very high comparative to what we've been used to for the last number of years. Right now, 4.5%, I believe, is the prime rate. And it's fairly high in comparison to what we got used to after 2008, which is basically like zero. It's cheap to borrow money. This acts like a stranglehold over these companies that don't necessarily make money yet. So think of your story stocks, maybe a lot of like AI innovation stocks, or these companies that have decent companies, but they're not to the point where they're generating enough income to support themselves, so they have to take out bank loans, investors, etc. The act of doing that costs more money as interest rates are up. So there's a stranglehold on these smaller companies, and also like small businesses in general. The higher these interest rates are, it becomes harder to acquire money to make more money. Just like with investing, if I have $100,000, I make 1%. I just made $1,000. That's easy because I don't have to take as much risk to make that $1,000. But if I have $1,000 to make $1,000, I've got to risk 100% and make a 100% gain. So obviously, having more money makes it easier to make more money. So the thought behind the interest rate calculation, or what we're looking at here into the near term, because of how CPI and PPI have come in, Trump is trying to pressure Powell to lower interest rates, because Trump's of the theory of now the market's getting better with inflation, which strongly debatable. I would say we're not yet. He's trying to pressure Powell into lowering the interest rates so that way the economy can theoretically thrive. Now, I'm not a macro expert. I will never claim to be. I can just provide you guys my perspective and do with that what you will. Sound off in the comments. Let me know if you have a differing opinion. Totally fine. But when it comes to specifically being in a rising rate environment and switching to a either stagnation or a falling rate environment, you'll see a few things change. And just in case you don't know, there's such thing as a hawkish and a dovish Fed. A hawkish Fed means the Fed is looking to raise interest rates, and a dovish Fed means they're looking to lower interest rates. So in the event we see a dovish Fed, so rates are starting to drop, look like they're going to drop, maybe we get a 0.25% cut today, who knows, you may see the market react very violently to the upside. This is not uncommon. Going from a rising rate environment to a cutting environment, again, alleviates that chokehold a little bit, theoretically, right? Now, there are vast effects on this, and I don't want to spend too much time going into this again, because the point is to prep you for today, specifically in the near term. But when you see, if you see a cut, that will cause the market to rise, more than likely cause a big pop in the market, especially in these story stocks, these companies that need to borrow money to exist. And if when that happens, you see that rise continue for a little while. But this is historically tends to be short-lived and actually creates a bear market, so to speak, longer term, medium to longer term. Again, arguments are consistent on why this is, but if you go back and look at trends from going from a rising rate to a falling rate, this tends to be what happens. Because of how our economy is right now, if you look at your CPI, your PPI data, your labor data, we're kind of in a flux where inflation's still going up, but not as much. And the Fed's got to be very careful to not push us into a recession, both either way on how they manage the rate. Because if they cut rates too quickly, or if they raise rates more, which I don't think we're in that environment or that conversation anymore, we can push us into a recession either which way. It's a very delicate balancing act. So I believe, and Powell said this before in meetings, where they're going to monitor the data closely and make the right decisions at the right time. I'm of the belief that the data so far has not supported a cut yet, nor a rise, but to remain stagnated until we see more of a change in this data. Because the data from CPI, PPI, any of your ADP labor data, even housing data, it's fluctuating. It's good and bad, right? There's nothing that says everything's going up or everything's going down in terms of data points, right? There's no trend that is clearly formed, at least, again, in my opinion. And I think that's what the Fed is going to be looking for. With that being said, how do you prepare specifically for today and specifically going on in the next few weeks, right? Well, like I said, if there was something outside of the realm of outside of the expected realm of possibilities to happen, it would more than likely be an interest rate cut, and that interest rate cut would more than likely be 25 basis points or 0.25%. Again, if that occurs, the market will more than likely react to the upside pretty sharply. To reiterate, the rate announcement is at 2 p.m. and the conference is at 2:30. So if you are someone who is looking to trade that, you'll notice that at 2 o'clock until 2:30, IV will remain elevated still, regardless of what the decision is. And this is why we talked about 0 DTE IV on the market earlier. Your IV stays elevated because the market doesn't really care so much about the rate. It is important. You will get a reaction, but it cares more about what Powell is going to say, because it's always great. What you've done for me today is great, but what are you going to do for me tomorrow? And how Powell feels and how the Fed feels about the forward-looking ideology of the Fed and which way they're going to lean, whether hawkish or dovish, that's what the market cares about, because we're all investing, a lot of us are investing money in companies' potential. We're not investing on what they've done currently, some of us do, but a lot of us are focused on what they're doing in the future. People invest in NVIDIA because they think AI is the next big thing, right? If you look at it just on nuts and bolts, you may think it's wildly overvalued, but people are investing in it because of the potential, right? Or any of these companies, really, any of the Mag 6, Tesla, wildly overvalued, right? But the potential of robo-taxis and robot maids and whatever, that's what people invest in, right? And that's what people care about. And you'll see that at 2:30 today, that's when your IV will start to come down drastically, because once the market gets an idea of how the Fed feels through Powell, then you'll see IV come down because the move has happened. The move is already happening in real time. And you'll see those contracts start to plummet in premium because the catalyst is passed, so to speak. So if there was a big expected move either way, it's gone at that point. Now, how should you play FOMC? You might be thinking to yourself, well, today is there's a very obvious time of day where the market will be very vibrant. It will be very aggressive, right? And I'm going to see the SPY potentially go up 10 points or down 10 points. I want to make money on that. Well, you could, but I would challenge you to think of things in a different way. And as I like to say, I want to look at things from a risk off or a risk on perspective, not a bull and a bear. Now, understanding that you are not a market genius, nor am I, to the respect of understanding that there's going to be a big move in the market more than likely. A move may not happen, but market makers are anticipating a move via IV. We've already seen that. If we go back to our at the money IV, let's see if it's gone up at all. It's actually gone down That 598 it was 30 before, now it's at 28, which you could have a pop it open, come down, and go back up. But elevated IV is anticipating some sort of something to happen, whether it's war drama or a catalyst. If a lot of you have traded earnings reports before, you'll notice that IV is up before the earnings. Something called IV crush happens. IV goes down after the earnings. The catalyst passes. So there's no reason to have an outsized move without the catalyst. The one way, if you are going to trade FOMC, and it's still not risk proof, I should say, is via a strangle or a straddle. At least in my opinion. But even then, you still take on a lot of risk. I feel like the best way to play FOMC, and this is really crazy. So there's a lot of people out there you could listen to, a lot of gurus, stock traders, whatever. This is going to blow your mind, okay? Because this is a proprietary secret that no one has ever probably spoken about. And in my 14 years of doing this is something that I've never shared. This is top secret. There's 71 of you watching right now, okay? 71 of you are going to be clued into this top secret FOMC trade, I should say plan, that never fails and succeeds 100% of the time. You close your brokerage. Close the app, close the brokerage, hit the little X in the corner, put down the phone. If you have no self-control, delete the app. Now, it sounds kind of dumb now that I've said that, right? But for most of you out there that are retail traders, you might be trading under 5 years, hell, maybe 10 years, 20, who cares, right? A lot of people have a hard time controlling their emotions in general. And that's the hardest thing with trading, is actually understanding yourself a bit more to know when you're wrong and admit you're wrong and be humble enough to admit you're wrong. And be humble enough to say, okay, this trade is done. If you've made money, this trade's done. I'm going to walk away now, and not think I can make 9 million more, right? That's the hardest thing to learn. And especially with social media now, we see all this hype and energy. And when FOMC happens, see all the news outlets reporting things. Powell's wearing a blue tie. Spies up, spies down, spies up. You might be in Discord alert groups or in telegrams or whatever, and they're alerting calls, puts, calls, puts, calls, puts. And you're like, I gotta get this. Everyone's talking about this. I have to get in. If you know you can't control yourself, feeling that, and you don't know how to react and handle that, walk away. Here's why. Let's say you decide to ignore my not advice. And let's say you decide to do those things anyway, right? And let's say you make a lot of money. Let's say you go from $10,000 to $100,000. You make a huge gain. You feel like you're Superman. You're on top of the world. You did incredible, right? Then you take that $100,000 and you go, hey, it's the next FOMC. Let's do it again. You do it again. Let's just pretend you make $1 million now. Wow. You went from $10,000 to $1 million. Oh, you feel like God. You're invincible, etc. Next FOMC, right? Third time, you do the same thing. Can't miss. You full port or whatever, you do the same thing again, and you lose it all and you go to zero. Did you ever make 10,000? Did you ever make 100,000? Sure. But do you have any of it left? It's a painful lesson. It's a lesson I've learned. And it's something I want to share with you guys because having that degree of self-control, there's been times in my life where I thought I've had it in the past, and I still faltered, right? And I'm not infallible by any means. I don't like to think that I'm better than anyone. But what I can do is tell you where I've made mistakes in the past, and I've made very costly mistakes, and hopefully influence you to not make the same mistake and go down the same road that I went down, unfortunately. Because it's a very painful road. It sucks. And it's a lot to overcome. And I don't want people to feel that way. And if there's an ability to avoid feeling that way, then I would love to share that with you guys. Because a very painful, expensive lesson I've learned is that no matter what you do, the stock market will be here tomorrow. But you will not be here tomorrow if you lose all your money. You can't make money without money. We talked about that earlier, right? It's easier to make more money when you have more money, right? What's the rush? And it's really silly when you think about it. You sit there and you mess around with your own psychological mindset and you go, what? Why am I rushing? Like, yes, the allure. Everyone wants the allure of making quick, fast money. It's fantastic. Who doesn't want to be rich tomorrow? But at what cost? At what risk? And then you don't appreciate it either. I would venture to believe that a lot of you would agree with me if you think of it in this mindset of, if I had $1,000 and it took me 5 years to get that $1,000 to $10,000, I would appreciate that $10,000 more than if I took $1,000 and got it up to $10,000 in one day. I would probably, without a doubt, have a better respect for my money if I took longer to get there, because I know how hard it was to get to that point. And I think that's a very valuable lesson where you may have to learn it on your own, but even if me just talking to you guys about it, and if you can actually digest what I'm saying here, then it might be something that pays you dividends in the long run. Like right now, SPY's having a great move. The Qs are pushing up. IWM's pushing up. So the market's moving up right now. You don't see me freaking out that I'm missing out on a potential trade because the risk isn't worth it for me at this point in time. What's worth it for me is to highlight this information to you guys so you guys can make educated decisions. I think the best thing, getting a little meta here, but I think the best thing that like a parent can do for their child is to teach the mistakes that they've made to their child so the child doesn't repeat the mistakes, right? You learn from someone else's pain. And that's how history works. That's how we have all these cures and medicine. And that's how the world becomes a better place. We teach others from our mistakes. And I really, really hope that I have 77 people watching, so even if one of you decides to take this information and avoid a potentially catastrophic mistake today, then that makes me very, very happy and fulfilled to know that, you know, hey, I watched this this live stream of this guy on the internet, and just watching his live stream made me realize, man, maybe I don't need to make a stupid decision today. And it was enough to save you money. So that would be my FOMC prep to you. Yes, you can make money. Yes, there's ways to do it. But most importantly, it's not about taking a trade. It's not about following someone else's trade or trade plan. All of that doesn't mean anything. What matters is, how do you feel in here, in your brain, emotionally, because all of trading is trying to ignore the emotions, but at the end of the day, it's very hard, and sometimes we have to be human, right? It's hard to ignore that emotion. You feel things at times. Are you strong enough to look at things strictly from a logical point of view and take a trade if it shows up the way that you want it to? And are you strong enough and logical enough to admit and humble to admit when you're right and when you're wrong? And be honest with yourself. And if you honestly can say, I doubt myself even 1%, take the day off, please. Now, the other thing what makes today uniquely special, today through Friday, and this is why I want to have this whole risk conversation. Today is FOMC. Obviously tends to be a higher volatility risk day, right? Tomorrow's a holiday. So lots of big money on Wall Street and whatever, especially on a Thursday holiday, there's a high probability they're not going to show up for Friday. So they might hedge position, do all their trading today between 2 and 4. So volatility could be insane today. Yes, I can offer you an opportunity, but it may be very hard to do anything today in terms of success rate with a little bit more clarity. Because on top of that, you have to keep in mind that, yes, we have the FOMC, yes, we have Powell speaking, yes, we have the holiday. Friday's OPEX, which is your monthly options expiration, for those of you who don't know. And we tend to see positioning into that as well. This whole week we tend to see positioning. But I would argue that you would see a ton of movement today on a lot of names and outsized moves between 2 and 4, more than you're probably comfortable with predicting for a lot of you. I know I am. I'll be humble enough to say that I probably won't trade today. If I do take a trade, it'll probably be before FOMC. I've been doing this 14 years. That's just me. That's my risk profile. Because I don't want to lose money. I want to be here next week, and the week after, and the week after. I want to be here for next month's FOMC, and the one after that. Right? I don't want to make a dumb decision, which gives me the inability to show up here tomorrow or Friday. Right? These are the things I want you guys to at least consider in your thought process when you're looking at the market today, because I know for a fact, I think the statistic is 5 out of every 100. And I've got 77 people watching right now. So there's statistically 2 to 3 of you watching right now that will blow your account today. Which is actually pretty alarming. Like I said, it's about 5% out of 100 will blow their account on FOMC day, or like a high volatility day. Of a retail trader will blow their account on that day. So if you're watching right now, you have a decent statistical chance. Views just popped up a bit, so now we're at 88. You have a decent statistical chance of blowing your portfolio today. Just comparing you, if you put them in a room, 5 out of every 100 are going to blow their account today. Don't be you. You're hearing this message right now. You're listening to me. You're investing your time hearing what I have to say. And that means you take it in some sort of reverence, right? You at least appreciate it. And even if you don't do exactly what I say, you do whatever you want, at least take it under advisement and consideration. And at least keep it in the back of your head, because I don't want, even though statistically will happen, I don't want any of you watching right now to be that statistic who make a grave mistake, who over leverage, who put all their money into a 0DT or a lot of money in their 0DT and then add more money because they average down and they do it again and they do it again and they do it again and now you're broke. Easy trap to fall into. It's a very slippery slope. That's what I have to say. There's your FOMC prep. What do we think in the chat, guys? Did we like our FOMC prep? Did we hate it? Like I said, conversation on risk, not about being a bull or a bear, more about how to approach days like today for most people. Most of you, it's not worth it. Genuinely not worth it. And if you did want to take a trade, the time to do it, in my opinion, would be even before 2. But on top of that, now you got all this other stuff with war and nukes and whatever. We're just in a very, very high volatility environment. For a lot of you, it probably isn't worth it. Let me know what you think in the chat. Also, in like 2 minutes, we're going to do our dumpster dive segment, which means we're going to dive into one name that I found, again, about 84% off of all-time highs in the dumps. This company has very, very, very strong brand recognition. And in fact, I'd wager to bet that probably over 50% of you watching right now have used this company's products in the past. They also are now integrating AI as well, for those of you that are AI investors. And they make pretty good money. Financials aren't horrible. If you have a guess of what that name could be, drop it in the chat right now. And before we get into that segment, guys, I ask you twice every stream. This will be the second and last time. If you haven't already, do me a quick favor. Like the stream if you're enjoying the content, whether you're on X, YouTube, or Instagram. If you haven't already, subscribe to me over on YouTube. Follow me on X. I think you follow on Instagram. I don't use Instagram too much, but do that too. Any little interaction, drop a comment in the stream. All that stuff really means a lot to me. Again, very small fish here. I appreciate your support. And I don't ask any money or anything for this. All I want is some level of interaction from you guys. That keeps me relevant in the algorithm. So the more you comment or whatever, the more it helps me out. So again, if you like this content, you want me to keep doing these shows, I will happily do so as long as I see that there's interest from you guys. So please show that interest via a comment, a like, a retweet, whatever, and I would be more than happy to continue. In fact, I made a deal with you guys that when we got to 500 subscribers on YouTube, that I will be doing this as a daily show. Every single day you get to hear my voice. So if that interests you, and most of you have a YouTube account, it takes 2 seconds. If you're watching on X, click the link, hit subscribe, and as soon as we get to 500, this will be a daily show. ADBE is the first guest we have. It is not ADBE. I believe that's Adobe. It's not Adobe. Decent guess. Are they 81% off all, or 84% off all-time highs? No, you're gonna make me look. Nah, come on. That's... Alright, that's still not great. That is... Whoops. Let's see how far Adobe is. 50 at that recent low, or that lowest low, 60. So not a bad guess. Has fallen down pretty good. Hell yeah, sir. Hell yeah to your hell yeah. Any more guesses? While I'll give the time, because I know there's a lag on the stream. for you guys to catch up. Let's look at the market real quick. We had a nice little pop there on the market. Let's check our volume on the 5-minute and see how our health is from a volume perspective. Not bad. We're keeping over 500K, so volume's actually pretty good. Watch this taper off now. We are at 10 o'clock, so watch and see if this starts to taper here down to like low 200s, which could happen here, especially with it being an FOMC day. What was the question I had to call it? The question just was if you had a guess on what the dumpster dive stock was. That's all. Q is looking pretty good as well. Getting a little bit of a rally here. Let's look at IWM. IWM tapped that LOI at 209.18, looking like it's going to come back up and try to break through there. Watch that 200 MA on the 5-minute, 209.91. Like I said, if you are going to be long today, I like IWM the most out of the indexes. There we go. Now my VIX updated. I don't know why that was lagged before. That was weird. VIX under 2030. So VIX actually breaking a key level here. You're gonna want to wait for 20 to get some downside confirmation on volatility. Your VVIX still not down that much, so expect to see VVIX stagnate or even climb near term, especially into FOMC. UVXY marginally down. Nvidia, nice little rebound here on the 5. Apple trying to defend that 195.83 level I talk about so endlessly. Yesterday at close, you saw it chopped around there. This morning broke underneath. Did not get a confirmed break on the daily, though. We're moving back up. So Apple is out of the woods for now. Microsoft only red Mag 6, as I call them, for right now. Google pretty flat. Amazon, nice. This is your strength here. Let's see. I bet Tesla's up too. Yep. Consumer discretionary. Amazon and Tesla. There's your strength. Big push here on Amazon. Big push on Tesla. Again, sub 330. 330, 360 is the danger zone for Tesla, and where it's like it's got a hard wall to break through. Specifically, 331.89 starts that little wall, so that's why I'm not looking to be like longer term bullish on Tesla until we're over that. Like a shorter term, it should be coming down more. All right, let's get into the dumpster dive segment. Are you ready? Okay, so this is the dumpster dive where I find one stock that is completely torn up, hated by the market, beat up, maybe forgotten of, and I bring it to you because another man's trash could be your treasure or my treasure. And in this case, that stock today is Match Group, MTCH. Now, if you haven't heard of Match, I bet you have. Match Group is a company that basically functions in the dating app realm, right? They own Tinder, Hinge, Match, obviously OkCupid, Plenty of Fish, and 45 total brands globally. So there's other brands that they own as well. Now for this dumpster dive, I did something a little different than I've done in the past, and I've outlined some bullish catalysts, so potential bull catalysts, and some bear catalysts, just to give you both sides of the trade. Of what I like and what I don't like going forward. On top of that, I have some technical levels that we'll talk about near the end as well, so that way you have an idea of what to look for if you do decide to take a trade in Match. Now, to be completely transparent, I do not have a position in Match at the point of this recording or this video, but I do intend on opening a long position in the near future. Now, for bullish catalyst, Match actually acquired a new CEO, and he used to be an executive over at Zillow. And his idea is to focus the platform more on AI-powered innovation, specifically through Hinge and Tinder. And obviously, AI is very big right now. Integrating AI into a dating app is pretty brilliant, in my opinion. Not like fake robot dating, like making fake people to talk to, but in the sense of matching the right people for a certain amount of money. That's a pretty brilliant idea. Hey, we found this person. Like, yes, you could type up your profile and stuff, but seeing how they interact and saying, hey, we found this person who interacts like this, and you interact like this, and you'd be a fantastic match, but you got to pay us $20 to connect you. Brilliant. Easy and brilliant. Obviously, there's other ways you could do this, but even getting some AI into these kinds of dating apps, because they're mostly apps, not even websites, I think is going to be amazing. Think about paying a certain fee for the AI to revamp your whole profile. There are people who run full businesses of making people's dating profiles more applicable. You could imagine hitting a button, paying $50 and making your dating app or your dating profile specifically to the specific kind of person you're looking for or whatever. Brilliant. So things like that are what really excites me because it's like the next venture into this space. On top of that, something I don't care about as much, but a second bullish point is that a lot of analysts are starting to look at higher price points. Now, I take analysts with a big grain of salt because I don't trust them. And a lot of the time when analysts go, oh, it's going here, it never goes there, right? But a lot of analysts are looking at like a 20 to 50% upside on this name. Again, I don't really care too much about that, but you might at home, so I figured I'd at least mention it. What I do care about is that Match has specifically seen a 31% or higher, 31% more than surge in call option flow recently, which is nice. And as you can see, the chart's starting to balance out here. We'll look at the daily chart. We'll look through the daily chart here momentarily, but we're seeing option flow in, or bullish options flow come through. Which is obviously going to be a bull catalyst here because people are betting on Match having basically a turnaround here. On top of that, if we're looking strictly at the financials, their free cash flow is still pretty solid. They've talked about buyback plans. They might be buying back more, especially at this price. And again, this is 84% off of all-time highs. This company right now is a $7 billion valuation, so keep these things in the back of your mind. With that being said, on that $7 billion valuation, so we're talking about market cap here, Hinge growth, I think, is very, very, very drastically undervalued. Right now, it's got 27% year-over-year growth. And I think, and based off what I've seen in the reports, I think the company's leaning towards this way as well, that Hinge will be about $1 billion company under their umbrella, brand, I guess I should say, by 2027. So, not necessarily tomorrow, right? But as an investor, purchasing at these levels is something like that is very interesting to me. Now, I'm a little biased and I'm married now, but Hinge is something that I gravitated towards and I personally used to find my wife. That's pretty cool. And why I think that's pretty cool is because Match specifically has all these other brands. I mean, if you've been watching the show for a while, you know that I also like Bumble for a different reason as a company. But they have these different brands that target different groups of people. In my current age, and the time I was meeting my wife, I wasn't interested in going on Tinder because Tinder markets to a certain kind of people, right? So I don't want to be matched with people who are that way because that's not what I'm looking for. I'm looking for something else, right? Having these different brands and seeing growth specifically in Hinge makes me think that we're starting to actually see a cultural shift from the Tinder-esque mentality to the Hinge mentality. Which is something that interests me, I guess, from a societal point of view, but more or less to see how if Hinge continues growth, while Tinder doesn't necessarily die, but stagnates. That would be a good thing in my book, and that would actually be a good catalyst if Tinder stagnates and these other brands start to grow. Because I have a few different reasons, but if people are on Tinder, I feel like, and this is personal opinion, they're not going to be spending money for, they could be spending money for like super likes and whatever, but they don't take it seriously, so they're not willing to put money down. Some will, obviously, but Tinder is typically being used for hookups, right? People who are on Hinge more than likely are looking for, or Match or OkCupid, whatever, more than likely looking for something a little bit more serious and may be willing, in my opinion, to, and this is all speculative to speak, maybe willing to put more money down to actually say, hey, here's some money and help me find someone I like, right? That's where the value is, in my opinion. On top of that, second to last bullish catalyst I have is market growth. We're seeing more people date online. I'm 31 years old. Mostly none of my friends have met their significant other organically in person, unless it's a coworker or unless it's in like the same social circle they've been in at college, whatever. People aren't organically going up, and I can tell you this from a guy perspective, so some women watching may not understand this, but as a man, if I was single and I went to a bar and I went to talk to a woman or went up to speak to someone, I don't have fear of that. What I have fear of if I go speak to a woman in a supermarket is getting maced or punched or screamed that I did something that I didn't do or whatever. And I know, and you can agree with me in the chat or not, I'm not the only guy who feels this way, that we feel like we can't do or say certain things, even though we're not looking to harm or do anything bad, just because there could be some sort of inference that we're doing something bad and can get in trouble. And I know that's a paralyzing fear that I see a lot from people, even on social media, from basically the 20s to my age, is that people in this age group do not feel comfortable approaching women. Some women think that, like, oh, I wonder why men don't approach me or whatever. It's not that you're ugly or whatever. It's that some of us are genuinely scared that you're going to think we're creepy or doing something bad, and then you're going to upload a video of me. It's going to go online, and now everyone's thinking I'm like all these bad things. No one wants that, right? So having more people find this as the preferred method of finding a partner makes a lot of sense. We're in the digital age, right? Everything's on the computer. You're watching me from the convenience of your phone or your iPad or your computer, whatever it may be. That convenience factor is a massive, massive plus. Maybe a lot of guys would be willing to spend money, or a lot of women would be willing to spend money to talk to someone they may not have the confidence to talk to organically in person without a dating app. That's where we're seeing market growth in this segment specifically, and I think that market growth will continue to rise, and eventually it will be more of the norm where over 80 to 90% of people, I'm willing to bet, will say that they met their significant other through a dating app or through some sort of online whatever, medium, I should say. And I think most people would agree with that sentiment if you look into the future. Lastly, the last bullish catalyst I have for Match specifically is that they're looking to continuously cut costs. They recently laid off about 13% of their workforce, and they're recently discontinuing live streaming. They had live streaming on some of their apps, which is very costly. That's why only like a lot of big companies will do it, like YouTube and X. But for like Match, it doesn't really make a lot of sense for them to have live streaming through their platform, so they cut that out. So they're looking to cut more costs down, which obviously increases and helps their bottom line. Now, for bear sentiment. So bear catalyst, potential bear cast, I should say. I already alluded to this, but Twitter has had declining users for 9 straight quarters. And according to management, they don't think that meaningful growth won't arrive till 2026. Now, in my opinion, that means nothing to me. I don't know how you can predict that growth would come in 2026 specifically for Tinder, unless they mean growth from a financial point of view. But we're talking about users, paying users specifically. And specifically with Tinder, we're seeing that tick down. Now, I alluded to Hinge's growth at the same time. So if we do see, and I don't think this is a bad thing, if we do see Tinder flatline while all these other brands are growing, that actually may be indicative of longer term growth, at least in my opinion. But nevertheless, their big star essentially is Tinder, and seeing that declining users for 9 straight quarters is indicative of why the chart looks the way it does, which again, we will get to momentarily. They have had some revenue guide misses. Recently, I believe in Q1 they missed. And again, they're lagging with Tinder's new user recovery. So when people leave, they're having a hard time bringing them back or whatever. Minor risk, because that's more of a short-term risk. So it kind of depends on your timing here. Your third bear catalyst is going to be competition. So we talked about Bumble earlier, but there's other dating apps as well. There's some localized Asian apps that have been getting a lot of interest. And obviously, Asia is a huge market, which they do have exposure to be clear. But they're putting a little bit of pressure on the market share. Now, I will say, and this part's very interesting, at least to me, that the company has seen a lot of its growth through acquisitions. So you may not know this, but Match acquired OkCupid. They acquired Hinge and another one called HyperConnect. That's where they see a lot of their growth. And I'm of the speculative nature that Match will actually buy Bumble one day. And it makes sense right now. Match is, whatever, I think it's 500 million. Or I'm sorry, Bumble. Bumble is, $550 million market cap. Meanwhile, Match is $7 billion, or $7.5 billion. So much, much smaller fish. And Bumble's pretty cheap right now, so they could acquire Bumble and kill their competition that way. Which wouldn't be out of the realm of possibilities, in my opinion, for Match, especially if they start to turn around here in the near term, get more money very quickly, they have a reason to just buy Bumble out. Nice and easy. The last bear catalyst I have is privacy law. If privacy law is changed wherever in the world, that could impact how they're using their information to market to their customer. So obviously, if the U.S. government comes out and says you can't use, I don't know, eye color to match people, whatever, right? You can't use AI to determine someone's eye color to match them with another person's eye color. That may impact their service of their eye match color AI thing that they charge $10 for. I don't know. Silly example, but these law changes could impact how they conduct business. Now that goes with any business, of course. So this isn't really, it is a bear catalyst in the sense that like it's a risk factor, I guess I should say. But it's not necessarily as strong of an overhang as the previous bear catalyst, at least in my opinion. Now I'll leave you with this before we get into the chart. In terms of our bear and bull catalyst here, does Match do well or not underneath any sort of economic uncertainty? I'm of the school of two different thoughts. Match could perform poorly during times of economic uncertainty due to the fact that people don't have ancillary funds. They don't have money they can just spend on frivolous things, right? They need their money for their groceries and their rent and whatever. They don't need money for their dating app to pay for a super like, right? Or, the other school of thought, is Match recession proof? Does Match operate in the same sense of a cigarette or beer kind of industry where if we're in a recession, people still buy their cigarettes, people still buy their beer. Do people still use Match through a recession, or Tinder? Are people sad and they use a hookup app more often? Are people willing to pay for money to use a hookup app more often through a recession, through economic hardships? Two thoughts to consider. Personally, I'm leaning more towards it being recession proof, honestly. It might sound foolish, but I do think that people, when they're sad, turn to things that make them not feel sad. Drugs, alcohol, cigarettes, sex. These are things that people turn to when they're upset. If we're looking at the time of, as I previously spoke about before, where it's harder for people just to go out and meet people in general, and you have this thing in your hand, your phone in your hand, and you can just set up a date right away. You have to put in minimal effort, or you're the kind of slime ball that talks to 50 people at once. You can leverage your odds that way. That's why I'm of the belief that Match is actually recession proof, because I don't think it's really going to go anywhere, in the sense that if the economy takes this hard downturn, I think people are going to be spending more money on Match, or at least not removing. They're going to be spending the same amount of money they make or more money on Match to help pad their sadness. So that's my bull and my bear catalyst case for Match. Now let's look at the chart real quick. This is your daily chart on Match, and as promised, that all-time high 179.85 back at COVID-y times, right? And actually, there's a great example of, I mean, obviously everything got very inflated through COVID. Money was flowing like crazy. But during a pandemic, people were still hooking up on a dating app. I can guarantee it. But since then, hard push all the way back down, almost like an enormous head and shoulders here on the monthly chart. But currently we're kind of, let's zoom in here a little bit. Here, let's remove my lines here just for a moment. And this is the monthly chart here, so a lot of time here. We're sitting on some level of starting to build a base here, mainly from like end of 2023 to now, where you could even argue you got some level of like a double bottom here. You wicked a little bit lower through the tariff drama here. But you got some level of like a double bottom down here, and leaving wicks all three times, here, here, and here, where price action is pushed back up. So it's looking like Match is forming some level of a base here. And again, these are monthly candles, so it's a longer time frame. If we zoom in here on the weekly, that thought process, that vision, in my opinion, looks even more clear, where we're zooming out, I mean, the same time period, 2023, and you basically have a long base here. If you want to be more anal about the base, you could start in like I said, late 2023. Where those lows have been consistently defended and the highs have been rejected as well. Accumulation. A lot of volume coming through down here. And now on the daily, Again, this is the most recent low, your 52-week low down here around that tariff drama time, 26.39, currently trading 30.71. And a lot of volume where it's trading right now. This is like your midpoint on the base here. So if you did like a long on match and you wanted to assume risking the 32-week low here, you're risking about a little less than a $4 drawdown from here. What's your reward? Well, your reward, 180. No, I mean, yes, maybe one day, but realistically, moving up to like mid 60s or at least going up 100% on this name on equity if you're patient, I think is very likely. What I need to see. So I've obviously drawn a few levels here. I'll walk you guys through it. That way you have a trade plan if it's something that catches your eye. Obviously, you need to get through the 200 MA here on the daily, and this 200 MA has been in the heart of this base. So it will flux over it over and over and over again. So this, again, is an investor type name. You have to be very patient. Now, obviously, you can find an options trade in here if you like that idea, shorter term. But for the investor, you're going to want to watch these key levels. You got a few bases here. So this last support here at 27.67 before that low, that's the support you want to keep an eye on. Other areas of support / resistance, 31.84, 34.04, 35.57, and this level, 36.71. Hold on, let's get back here. I'll show you why. Because at 36.71, we have a gap, I believe. No, we don't. I thought we had a gap there. Let's go back here. We don't have a gap. I just miscolored that. Okay, 36.71 as another key area. Now, past 36.71, keeping an eye on this. No, I'm a liar. We do have an open gap. Ignore that last 30 seconds. There's an open gap here from 11.6 to 11.7, and it fills at 36.71. Technically, that gap was never filled. So that is a gap to be filled still. I mean, it's filled once we tap 36.71. So near term, you got about 20% to the upside here versus about like 10-ish% to the downside. So 2 to 1, even if you're just playing to the gap fill. Past the gap fill, though. Here, we'll go to the weekly just so we can see things. And you see a lot of lines here because I've really charted this one out. 41.52 and 44.08. Next two big levels to watch. If we get over 44.08, then we push into multiple gaps to the upside. Now, I didn't bother getting too in the weeds past this 44 area, but I just wanted to highlight all these gaps to the upside. You got a gap here, 55.97 to 56.93. Another gap at 60.74 to 61.47. Another gap from 64.11 to 71.77. Another gap at 79. Another gap at 105. Now, gaps may not always fill right away. They don't fill all the time. Most of the time they fill, though. And on a name like this, as I've outlined for you with what I think makes this name a strong, bullish stock for a turnaround play, if you're patient, especially on equity, risking these lows here, your risk to reward here is phenomenal. Even if you only wanted $60 on this name, you're risking, again, a $4 downside for a $30 upside. It's 6-7 to 1 risk to reward. If you're patient, I'm of the belief that this is a company that's not going anywhere, that will be making more money in the future. It's got a new CEO that I think is very smart. And I don't think the bear catalysts are that strong. I think this name has been hated on Wall Street for quite a bit. I think flow, so if you're an option trader, you'll see flow supports that this name could be a more bullish name longer term. I think this has a lot of good things going for it if you are patient, specifically. If you're an options trader, you might need to time things a little more specifically or carefully. But with how this is sitting, with where it is, for the risk reward you're getting at this current price, I believe Match is a solid name for you to consider in your portfolio. So hopefully you guys enjoyed this little episode of Dumpster Diving. Again, the stock was Match, MTCH. Let me know what you think down below in the comments. Don't forget to like, share, and subscribe. All right, guys, what do you think? I recorded that, as I do always, so that way if you want to go back and watch, you can weed through the specifics. But this is a name I've been watching for a few months now. I was debating getting in down here on around this 27 area, and I waited. But I'm thinking about opening up a position in here in this general like $30 area. I haven't yet, but I'm thinking about it. Look, I'm talking about Match, and it's going up. All 95 of you must be loading the boat on Match here. What do you guys think? Do you like my thesis? Do you disagree with my thesis? Do you think Match will be successful? Do you think Match is a dog, is a bad stock? I would like to know everyone's opinion. I think it's a solid name. Obviously, I don't think it's going anywhere. They've got a good business, got decent moat. They've got great brands. People know the brands. If you type in a dating app, you're more than likely going to Tinder, Hinge, or Match, or OkCupid, or Plenty of Fish. Like, those are all Match brands. They've got exposure in foreign markets. They're trying to get more exposure in Asia. It's a massive market. Lots of people there. I think, same way, I feel very similar about Bumble. Match is more bullish than Bumble. I think Bumble is just undervalued. But same kind of thought process, really. I don't think these companies are going to go anywhere. I do think Bumble's a buyout candidate for Match, but, you know, there's that. Anyway, guys, I think that's going to wrap it up for the stream today. It's 10:30. It's typically where we round things out. Let's just check back in with the market here real quick, see if we missed anything of interest. Wow. Market just getting a slow little melt up today. And like I said in the beginning of the day, there are times before FOMC where we do see a definitive move up or down, and I guess today's one of those days. I wasn't going to bet on which way. I just gave you guys the levels to watch, like this obviously 600 and 601.92, which if you've been watching the streams, it's been... this has been a very key level. And then to the downside, that 592.65. It'd be wild if we tapped both of them today, but hey, anything can happen. It is FOMC day. All right, guys, I will leave you on that. Hopefully you guys have a great rest of your day. Please make smart decisions. And if you forgot everything I said in the beginning, please go back and watch it because I think it's very important because I don't want any of you making any horrible mistakes. I would love to see you all here again next week for our next show. So with that being said, some say you'll need an edge to trade. Well, I like to look at things from a different angle, and that's always what you'll get right here on the Atomcash angle. Have a great rest of your day, and remember, precision beats prediction every damn time. See you next week. Enjoy the holidays.
The time has passed, and that's a wrap. You're on.